On 14th September 2018, in a meeting between Government of India and RBI, when the situation happened very tense, Prime Minister Modi lost his cool, and then RBI Governor Urjit Patel and compared him to a snake who sits over a hoard of money. Former Finance Secretary Subhash Chandra Garg has written this in his book, and later on we know Viral Acharya, the Deputy Governor of that time, and Governor Patel both resigned and quit RBI. Hello everyone, I am Chandra Prakash Joshi. We are discussing about the recent surplus transfer of 2.69 lakh crore from RBI to Government of India. In this video, you will understand what are the income sources of RBI, whether number two, whether RBI shall give this surplus to Government of India, and if yes, why RBI shall give, and number three, what is the right amount of surplus in future, whether RBI will be able to manage these kind of large amount of surplus, because this is a historical high of 2.69 trillion rupees transfer by government, by RBI to government, when government itself has budgeted 2.56 trillion. 2.56 trillion, including RBI plus all other financial institutions, including banks, was expected. Now, this is much more than the budget. The fund transfer, the surplus transfer from RBI to Government of India is mandated in the RBI Act 1934. But there is always a bone of contention about the amount of the transfer. That has to be approved by the board of the RBI. Always, as it happens, and we quoted the discussion, the heated discussion between the Prime Minister Modi and Urjit Patel, when Dr. Vimal Acharya finally said that the RBI independence is under threat, under attack by the government always wants more. RBI think that RBI's role is to keep the financial stability in the country. It does not matter whether the government loses election or government wins the election. But to maintain the financial stability, the balance sheet of the central bank has to be stronger, and therefore RBI shall keep more and more money with itself. This has always been a talking point, a heated debate, and argument. After this 2018 discussion and debate between government and RBI, finally it was decided to form a committee under Dr. Bimar Jalan, a former RBI governor. Here you remember this term economic capital framework that was to be decided for RBI, how strong the balance sheet of RBI shall be there and how much reserve RBI shall keep. Jalan committee therefore gave a formula of keeping some contingency risk buffer, that is for the situation that can happen anything in the economy and RBI will have some money. So the land committee gave a recommendation that the contingency risk buffer has to be somewhere in the range of 5.5% to 6.5%. Well done. So RBI started keeping this reserve, and the amount, the earning of RBI beyond that was transferred to Government of India. First, now let me tell you what are the sources of earning for RBI. There are three sources. Remember this very, very well. Three sources. First one is called Sinores. So Sinores is the amount of profit RBI earns when RBI gives currency to banks. Say for example, a 500 rupees note. If a bank has to take 500 rupees from RBI, what bank will do? Bank account will be debited by that amount. But for RBI, what is the cost of a 500 rupees note? The printing cost, I don't remember exactly, but it will be somewhere 10-20 rupees. So rest, say 20 rupees is the cost, rest 480 rupees is the profit made on every piece of the currency note by RBI. This is called seigniorage. Number two is the income from the investment in the foreign assets. The entire amount RBI mostly invest in gold, in foreign security like US government securities. This year, the interest rate in US were higher. So by earning interest on these foreign assets, foreign currency assets, RBI earns. Third, RBI earns by lending operations. RBI lends to government, state government and central government, and RBI lends to banks. Open market operations also contributes into this income. Therefore, the surplus of the income RBI transfers to Government of India, as Government of India is the complete 100% owners of RBI. RBI was earlier a private bank, but that is a history before independence. Now, the Vimal Jalan Committee recommendation was approved by RBI board, and 2019 RBI started implementing these report, and as per the suggestion, RBI maintained a CRB contingency risk buffer of 5.5%. In 2022-23, RBI increased it to 6%. And then in 23-24, RBI increased this contingency risk buffer to 6.5%, and that was the limit. The limit given by the Dilan committee was 5.5 to 6.5%. So this limit can be revised after 5 years. That was the committee's recommendation. So this year, RBI again very smartly revised this limit. Of course, the board of the RBI 1% both sides, from 6.5 to upper limit goes to 7.5, and the lower limit from 5.5 to 4.5. And what RBI did, the contingency reserve RBI has kept 7.5%. Only then the remaining amount goes to Government of India, which is 2.69 lakh crore. Had RBI kept the same amount of reserve, 6.5%, the amount transferred to Government of India would be around 3.5 trillion. So basically, it looks like RBI has actually kept the higher amount of reserve with itself than it was expected as per the earlier percentage. RBI increased the percentage. There are two questions to it now: whether RBI will be able to continue this kind of high surplus transfer. The chances are lesser, because the chances of having these kind of dollar sale, which has happened in this year, RBI sold about $34 billion in the market, which RBI bought at a lesser price. Chances are lesser that RBI is going to sell these kind of dollars again. And secondly, because RBI has already kept good amount of reserve, and RBI would very like unlikely reduce this percentage to give more money to Government of India. Though Government of India will continue to ask for more, but let us see how it comes in coming year. I expect that the amount of surplus transferred by RBI may not be of this kind of money in coming years, and that may again cause some tussle between government and RBI, in a situation when RBI's income is going to be lesser if the interest rate declines in US, and as happens this year, the dollar share is lesser. What do you think? What is the right amount of surplus? Is it good to transfer this much of money to Government of India? Write in the comment. We will discuss all that in detail in coming videos. And looking for making your preparation 50% faster, there is a great opportunity to contribute for working with the central bank of the country. Exam is the only place where you get guidance directly from faculty members, those who have cracked this exam. If you are looking for making a career in the central bank of the country, welcome to iExamB. Subscribe to the channel, and please ask your question in the comment. I wish you all the best.